Well, I wanted to jump back in today and follow up with what we talked about last week. Last week, if you missed that, you can go back and see it on last week's Mortgage Minute. But we spoke about fees associated with a loan. But this week, I want to talk about the broker's fees. And it's almost one of those things like, I'm asking you how much you make. So it's a little uncomfortable, a little sensitive, but I do want to know when it comes to broker compensation models, how are loan brokers compensated? And how are they like as you can say, are there totally different compensation models? And if so, can you explain those?
Okay, yeah, that's a good question. And that whole environment changed after the Great Recession of '08 and the creation of the Consumer Financial Protection Bureau. That created a situation where mortgage originator compensation became regulated by the CFPB. And so that's been the case now for approximately since around 2010. And it's an interesting arrangement. And so let me try to summarize how it works. First of all, I think what we're going to explain here is how mortgage brokers are compensated. And I think that's important. And that's because, as we talked about last week, I think mortgage brokers, I didn't used to think this way, how I first came in the business, but I think mortgage brokers are probably the best option for a home buyer or a homeowner looking to refi because of their focus and specialization in the process in terms of originating the loan and delivering it to a lender. And because there's now hard evidence that going with a broker will save the borrower money over going with a bank or a credit union or a mortgage bank. In addition, I think when you're dealing with a mortgage broker, that gives you the opportunity in the most transparent way to know exactly who that originator you're dealing with is going to get paid or is going to charge for arranging your loan. Dealing with a broker, you have that information readily available, and I think that should be considered a benefit to the borrower. So with that said, what happened was in 2010, the federal government came in and said, we need to regulate how loan officers, mortgage originators are compensated. The way the scheme works is every quarter when we sign up and get approved to deliver loans to a wholesale lender, one of the things we have to do is sign an agreement where we are going to declare to that lender what we want for what's called lender paid compensation. What that means is we're going to declare to that lender that we're signing up with how much we want them to pay us when we deliver, Jack and Jill Smith's mortgage loan that they fund. And so then what happens is they're going to present us essentially a grid. And that grid is going to show numbers from 1% to typically up to 2.75% of the loan amount. And it's usually in eighth or quarter increments. So as a broker, we can say, hey, we want you to pay us 1 point of the loan amount, 1% of the loan amount. That's all we want. On the other end of the spectrum, some brokers will say, we want the max. We want 2.75% of the loan amount. And then in addition to that, you have to pick a number in that grid. And then you also have to declare if you're going to charge a flat fee in addition to that. Like I want 2% of the loan amount plus $300 or plus $500. So you have to declare that. And then lastly, you have to, in most cases, communicate to the lender the minimum amount of compensation you want to be paid on a loan, as well as a max. And that's important because on bigger loan amounts, that can affect what kind of rate the borrower is going to get. So that's what you have to do when you sign up with the lender. And then those numbers, that compensation arrangement, those specific numbers are allowed to be in place quarterly. So in other words, every quarter, us as the broker can go back to our lender and say, we want to tweak this. We want to raise it or lower it. We want to add more of a flat fee, or we want to change our minimum and maximum. So every quarter we have the option to do that. So that's basically how we're compensated. And what's important about that is when you're working with a broker, you can have the ability to find out where they are in that grid. Now, in our case, we have always been told that we are on the low end of that grid. Currently, we are at 1.25% of the borrower's loan amount. And we've been at that level for quite some time. We do not currently have a flat fee added to that. So we're just a flat 1.25. I've talked to many of the account executives with wholesale lenders we deliver loans to, and there's a couple things they tell me. One is they tell me we don't ask for enough compensation. They tell me that we're too low. And part of the reason they tell me that is because I've asked them, well, what do most of your brokers, where do they pick in this grid? And I've been told multiple times it's the answers I get are typically somewhere between about 1.8 to 2.25, even 2.5.
Wow.
So on average, probably close to 2. So why would that be important to a borrower? What's the implication to them? Well, it's pretty significant, actually. In fact, I looked at this today. Based on today's current pricing, if I was going to deliver a loan to this particular lender whose pricing I was checking, to adequately cover our lender paid compensation so that the rate to the borrower would be zero. They wouldn't have to pay an origination fee or points. It'd be zero, what we call 0 points. The rate I could offer covering my 1.25 compensation would be 7.25 today. Now, with that same lender, if I was a broker who had declared at the beginning of the quarter that we wanted 2.25% of the loan amount, the rate that would be available at 0 points to that same borrower wouldn't be 7.25. It would be 7.5.
Wow.
So what's happening is you're paying 0.5% higher rate because the broker you're dealing with chose to submit their lender paid compensation request at a higher rate, a higher percentage of the loan amount than what we do at MortgageWorks. So that's why in a majority of cases, when I'm faced with what appears to be price competition, where a borrower is saying, "Hey, look, I'm checking with 3 different brokers," I'm like, feel free, go ahead and check with commercial banks too, or a mortgage bank, because given that we require a relatively modest amount of lender paid comp for us to be happy with our numbers and what we're trying to achieve in terms of running the company, go ahead. And what we typically find is we end up having a better deal to the borrower simply because we are not asking our lenders to pay us as much as the next broker down the street that they might be talking to.
So I got just a couple of follow-up questions on that. One is, so if you're a broker and I'm a broker, and you decide 1.25 and I decide 2.125 or 2.25, is there a difference in the quality of service we deliver? I mean, the paperwork, does it mean I have to do more things for that same rate?
No, that's the point, is that each broker is different. We're all going to handle the same type of process. We're all going to basically gather up the same kinds of documents and put them in file folders and upload them to lenders and get them underwritten and approved by that lender and funded by that lender. We're all going to go through the same essential process. And we're all following essentially the same rules. Fannie Mae essentially is the sort of the standard as to guidelines for conforming or conventional loans, FHA, VA, of course. So we all are playing by the same rules. So it ultimately comes down to a subjective decision where myself here at MortgageWorks, what do we think is fair compensation to us while at the same time providing the best rate possible to the borrower? And we decided long ago 1.25. Most other brokers that we compete with, they've made a different decision. Now, there's some out there who are low. I've heard of some that are 1% or 1.25 like us, or 1.5. But it appears from all the years I've been doing this and talking to different wholesale lenders, in most cases, the other brokers that we compete with, they're higher up on that spectrum. They're 1.75, they're 2, they're 2.25. I had a wholesale lender a couple of weeks ago tell me they got brokers that maxed out at 2.75. And I just said, I think that's not fair. I'm not a good enough salesperson to sell the kind of rate that I'd have to offer that borrower in order to be require that we get paid 2.75% of the loan amount. I just can't do that. I would feel guilty doing that. Putting together a loan file and all these pieces of paper together to deliver to the lender, it's not really that complicated. And so you start going, well, if we're doing a $500,000 loan and we're going to get paid 1.25% of the loan amount, that's pretty good compensation. Our overhead's low. We can make the business work that way. Why do we need to get paid 2.5% of the loan amount? Heck, that's $12,500 to put a stack of paper together. I think it's a bit much. At least that's the way I've always thought about it. So,
Yeah. So another question I have is so if if someone out there is shopping for a loan, and it sounds like when there's a higher compensation by the broker, then that shows up in the different rate that they can offer. Is that correct?
That's correct. That's correct.
Yeah. So and that's for the life of the loan, right?
Well, presumably, which is done in most cases these days, given the volatility in the market. If we are, when we originate a new loan right now, almost always we're locking in that rate right at application. So, if they've gotten a quote from a broker who wants 2.25 compensation from their lender, and they're getting one from us, whichever one they pick, which presumably be us, but let's say they pick somebody else, or they didn't check with us and they didn't know that I had something better. When they get that quote, they should, when they lock it in, then it's locked in, and that's what the originator is going to get. I think the point is, though, that in most cases, the borrower doesn't really delve into that enough to really know what's going on.
Yeah.
I with us, there's no secrets. I mean, we're happy to explain what we're getting paid. And the other thing that we do is we always make sure we give somebody, a borrower, these numbers, the numbers that we can present to them in terms of rate and fees. We're going to give that to them up front, even before we start the process, through a closing cost worksheet option, which is not considered an official loan estimate, but it's still an acceptable vehicle for us to give a borrower specific numbers right up front before we even start the process. Because really, as long as I know the borrower's credit score, I know the purchase price and the down payment, the loan amount, I can give them a detailed written worksheet. Again, it's not an official loan estimate. It's a worksheet. It's got the proper disclaimers, but they'll know the full story before they even say, yes, MortgageWorks, we want you to do the loan because we like these terms.
Yeah.
And because it's based on our lender paid comp, which is generally lower than our competition, the rate's generally going to be better what they're going to find elsewhere.
Well, so would you categorize MortgageWorks as a discount brokerage?
No, I mean, I don't like to present it that way. In fact, when I was with a mortgage bank, the first, fourth of my career, or not fourth, about, a third of my career, that was it. It's like, yeah, we sort of like downplay them as, oh, those are discount broker or originators, mortgage companies that, they don't know what they're doing, blah, 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 limited menu, all that kind of stuff. So no, I don't consider us a discount broker, at least in terms of the stereotype of a discount broker or mortgage originator. What I like to think is that, yeah, we may offer discounted, price for the loan is, I think, a good way to think about it, but with the added element of highly experienced and knowledgeable about the products, the process, the underwriting criteria the borrower has to meet and get through. We add that additional element of being, essentially experts at what we do. And in other words, I would like to think of us as essentially on the same level, or, as a borrower's attorney or their CPA, at a professional standard that, pretty high standard. So we have, those features. We're very hands-on, very consultative in terms of dealing with our customer, very knowledgeable, experienced. We've been through it all. We know we've been through every scenario I can ever think of. But yet I'm going to deliver that process, that experience at a much better price than I would say a majority of my competition does. But I think in a way, mortgages cost too much to the borrower. So
yeah, it sounds like you've decided long ago that you're going to produce high quality product at a very fair price.
Right.
And that seems to have worked for you for 40 plus years.
Right. Yeah.
Right.
Yep.
I do want to ask a little follow-up question. You said that this particular compensation package changed at about 2010. What was happening before then?
Well, yeah, that's a good question. It's kind of the Wild West, frankly. At that time, certainly before '97, for example, when I was at the mortgage banking company, it was a lot different in that, within the company as a loan officer, you would get a daily rate sheet from the company, and essentially that was our wholesale price, and then we would simply negotiate a final price with the borrower. As a loan officer, we could decide, do we want to earn 1.5% on the loan, or do we want to earn 2%? And of course, in those days, you'd usually split the commission 50-50. So, I might say, I'm going to originate this loan at 1.5% to the company, so I'm going to get half of that. I'm going to get 0.75% of the loan amount. So I mean, we just did that. Here's our raw rate sheet, and we would decide deal by deal what we were going to offer the borrower. And of course, that turned out to be hazardous because of concerns about, are we giving certain people, certain groups better deals than others? And then, of course, there was the problem of some loan officers would literally quote a deal off a daily rate sheet, essentially promise it to the borrower, sometimes in writing, but not lock it with the company's lock desk and let it do what we call float. Why? Because they were betting the market would improve, and they would lock it the next day, hoping they would gather more income, capture more income for the company, and get a bigger commission. The problem was that they were wrong. Then they were faced with having to either own up to their guarantee, essentially, and accept less commission, or maybe no commission if they were really wrong. And of course, in the worst case scenario, they would play that kind of game and then not deliver what they promised and change the terms on the borrower. So it was a crazy kind of, like I said, a Wild West time. And so those kind of situations are all pretty much gone now.
So what advice would you give someone who's a home buyer and they're starting this whole process? What's one word of advice or one piece of advice you would give them that would help them? I'm not going to say that I would love for them to always go to MortgageWorks, but to make sure that they're treated fairly when it comes to compensation from the brokerage.
Well, there's a couple of things. First of all, if they're going to be shopping around for a mortgage, one of the things I always do, particularly if you're comparing more than one originator to another, be sure to always get the numbers, the quotes on the same day, typically even at the same time of the day. I know that sounds silly, but what a lot of folks don't realize, the bond market, which is what drives mortgage rates, is just like the stock market. It goes up and down every day and intraday, during the day. So I can give somebody a worksheet with a quote an hour ago, and an hour later it could be no longer valid. And so I'll run into problems sometimes where I'll give somebody a quote based on today's market, and they'll say, "Oh, I have a better deal." And you have it in writing? Yeah, send me a copy. They send it to me. It's from a week ago when the market was better. So you have to compare mortgage originators, mortgage offers. You have to compare them on the same day. That's vitally important. And the next thing is, I would urge that you get it in writing, get a worksheet. Some lenders will say, "Oh, I can't do it until you get an offer accepted because I can't give you an LE." That's true. They can't give you an LE, but they can give you a worksheet. There's a standard format in the industry. It can be used to give somebody all the numbers right up front. And in that process, that's where you should ask your originator, particularly if you know you're dealing with a broker, based on these terms, what's your lender paid compensation? I mean, that should be the question. What's your lender paid compensation for these terms? You can make a judgment about if you think it's fair or not, but I think as a borrower, you're entitled to know that.
Wow, that sounds fair. Well, Art, first of all, thank you so much for being just very transparent about all of this and really kind of bringing us into the understanding of what's really going on out there. And I don't think anyone that watches this now or in the future will say, well, brokers shouldn't be compensated. That's not even a question. And that's why I asked you the one question about, well, if somebody has a higher rate, are they doing more or different work than you? If you say it's exactly the same work and the results are the same, but my rate is higher by half a point or a quarter of a point, which turns out to be a much higher, mortgage payment. You got to think twice about that. So I would encourage you to go see Art at MortgageWorks. With that, Art, I'm going to turn it back over to you again. Thank you so much for sharing this.
Thank you, everyone. Thanks for listening. Thanks for watching. Stay tuned next week for another edition of Mortgage Minute. In the meantime, I'm Art Alvarez at MortgageWorks, where we do have the answers and they're on the house. Take care.